Yesterday was one of the worst sell-off days since June of 2013. The TSX closing almost 350 points down in one of the worst one-day sell-offs amid a further plunge, of course, with energy stocks. You've seen all those oil prices dropping. It's great for you when you're buying gas. There's no question that consumers will be happy because the pump price is low, but it's going to have a big impact globally, and investors are very jumpy. Let's bring in an old face that I haven't seen in a long time, John Stevenson. He's down at the TSX this morning. Good morning, sir.
Yeah, good morning, Alex. How you doing?
I'm good because today I get to actually see how much it's going to cost me. My pump is, my gas tank is absolutely empty, so I'm going to go fill up right after work. And I want to truly see how much money I am not spending anymore. So it's good news for folks like me because we're finally getting a break at the pump. But these oil price dropping, the oil prices dropping certainly has investors very jumpy these days.
Yeah, it does. I think part of the reason is it was unexpected, and I think the other part of the reason is the magnitude. I mean, we've lost over 40%, and personally, I'm of the view that we've got further room to go on the downside because right now we have too much oil and not enough demand, and that's basically the story. And so whenever demand and supply are out of whack, prices adjust, and in this case, they're adjusting downward.
Okay, so for those of us who are not savvy in all this, you know, watching the markets go up and down, I mean, it's somewhat nerve-wracking. So what is it that we should be worried about or watching for?
Well, I think what you're going to have to watch for is global demand. I think the backstory for all this and why the markets have reacted so negatively is it's not just about falling oil price, but the reason oil is falling is as part of a broader story, which is demand is fairly weak around the world. You've got Europe either in recession or tottering on it, Japan in recession again. And you've got very weak growth out of China. So that's the backdrop. And really only North America looks pretty strong when I look around the world in terms of economic regions. And so that's what the underlying story is. Markets are forward-looking mechanisms, and they're looking out in the future and saying, hey, things don't look so great coming around the corner. I think though for a whole variety of reasons, we're going to be into a lower price environment. That's good for consumers, as you pointed out. Not so good for Canada, not so good for Western Canada in particular. Yeah. Given our heavy reliance on oil as our #1 export.
But the bottom line is, you know, while we may be saving money at the pump, investors overall will take a hit because everyone, to some degree or other, whether it's your pension, your RSPs, sure, has oil in their stock.
Yeah, and there's a whole bunch of things that will be affected. For example, the financials, the banks took it hard because they were perceived as being the financiers for energy companies, which is, I mean, somewhat true, but a huge exaggeration. I think the BMO, for example, has 2% of its loan book to oil producers. I mean, it's a very small number. So, but nonetheless, it's all getting impacted. It's essentially a sell Canada trade that's been going on really globally. You've had program traders, and some were rumored to be Goldman Sachs on Monday selling Canada en masse. And so materials, financials and energy took it very, very hard, and of course that's continued up through yesterday, and most likely will continue for another week or so. So I think it continues on.
All right. So strategists are saying that the wild days, you know, this is just the start of many more wild days. How long do you expect this kind of turbulence to go on, and what do you see the bottoming out price on oil going to?
Well, keep in mind, we don't get the same price as what's quoted on the screen. We get Western Canadian Select prices, which are currently $43 US, as opposed to the 61 and change we're seeing right now. But in terms of WTI, which is the one that's most quoted, I think that's going to be in the low 50s, maybe 51, 50, 52. I think that's going to get there in the next couple of months and stay there for a while. And I think you're going to be in a low price environment for up to 2 years' time because I think the Saudis have made it pretty clear that they're going to drive out shale production growth, and oil sands, anything marginal, is going to be driven out of the market. In terms of the turbulence in the stock market, I think you're looking at the balance of this month for it to go on. So call it 2.5 or 3 more weeks. But then things will level out. And so it has huge implications. And I think ultimately the forecast for next year, our forecast for next year, is for the TSX to maybe return 4 to 5%. S&P doing quite a bit better, doing roughly double that.
Okay, so there's a couple of narratives then, because if Canada's being hit, then you've got economies like Russia being hit, European economies will be hit. Could we be looking at a global recession, a return to those 2008 days?
Well, I think we won't be looking at a North American recession because the U.S. data is phenomenally strong, and so that's the good news and the silver lining in it. And keep in mind that, you know, the price at the pump and the reduction of that probably adds about $2,000 annually to people's ability to spend. So, and maybe some of that will go into investment, some of it will be saved. But still, there's going to be a lot of beneficiaries of that. Restaurants would be a beneficiary of it. Industrial companies are a beneficiary. Airlines do well in lower oil price. Industrial companies broadly do better. So there's a lot of winners here from this. I think in general, it's not a bad thing for the economy, but it is very geographically specific. So Western Canada, as I mentioned, definitely that will be a huge problem for them, and especially for the government, which essentially is balancing its books on $78 oil.
Yeah, sure. Look, Saudi Arabia is trying to make a point. They're doing a good job of making that point right now. They've got a long-term game plan that they're trying to fulfill. What should the game plan be as far as Canada, though? Because obviously Alberta, this is their bread and butter. And so what do you see happening there? I mean, the oil sands is not going to go away. And I think anyone who's thinking this is the end of Alberta is foolish to think that way, because oil prices will go back up, I think, at some point.
Yeah, I mean, look, they're highly tied to global demand, and this is the point, that global demand is much weaker than what we thought. I mean, we thought we'd have global demand just from China growing, or Chinese demand growing by 600,000 barrels a day this year. It grew by less than a third of that, by under 200,000 barrels a day. So we're not seeing the demand. That's the more worrisome side of the story. I think it will eventually adjust to these prices. I think certainly some of the legacy producers, Suncor, CNQ, Canadian Natural Resources, will do fine because they have projects that are economic even at these very low oil prices and even the projected future low oil prices. So I think they do okay. I think as a country, we need to diversify and continue to invest in things like high tech. And one of the things I'd point out is from the GTA to Windsor, we have a burgeoning high tech sector. I mean, it's small, but we're really developing that. So this is going to be a story for the future. So I think you'll see a year from now or 2 years from now that technology would be a bigger sector in the TSX than it currently is. Industrials might be a bit bigger sector. So there will be some winners here, and it certainly helps because we'll have a lower dollar, which will help exports. So that'll be the other benefit for Canadians.
Sure, and it's a benefit to Ontario, which has taken such a hit in its manufacturing sector. I mean, energy prices here are very high. It's driven a lot of business from the province, but that low dollar could prove helpful to Ontario, which is in an awful lot of trouble right now.
Yeah, it will. I mean, certainly we're a big beneficiary of the auto pack. It's very hard to get companies to relocate their assembly plants here when you're talking about a $101 or $102, but maybe at 80 or 70 cent dollar, then all of a sudden it becomes attractive. Unfortunately, that's a long dated proposition. You need to see the Canadian dollar fall, and then you need to have at least a year or so before companies are willing to invest at that level and that exchange rate. But I think it certainly does spur demand and increase interest. It will definitely be a help for Ontario and Quebec.
All right, and so there are things that people should do and not do in these times, and I think the best advice is don't panic. So what's your advice, I mean, to those of us who kind of follow the advice of folks like yourself?
Yeah, don't panic. Reduce your exposure if you can to energy companies, and that would include indirect energy companies like the pipeline companies that, while they don't actually take commodity price risk, will nonetheless sell off in sympathy with them. I think the financials, I mentioned they were being sold, but I think that's an opportunity in disguise. I think, ultimately in another couple of days or maybe even a week or two, they would be reasonable places for people to start buying back in, because I think when you look around the world, Canadian banks are the best capital allocators in the world. So that's not going away. Yes, there is some impact from this, but it's very modest.
There's been some discussion, some debate as to whether OPEC is now a thing of the past. What are your thoughts on that?
Well, I've been to OPEC and to their meetings in Vienna, and they are essentially a gab fest and a PR stunt. So I don't think they've ever, at least in the last 5 years, been effective in some ways. But I think what the people need to understand in all of this is that OPEC, but mainly Saudi Arabia, controlled prices and allowed prices to rise to this level for the last 3 years. Prior to the meeting, they signaled very directly by releasing 150,000 barrels a day of oil onto the market that they were no longer willing to play this central banker role. And what underlies this story and why this is going to go on for a long time, and I think a couple of years is a reasonable estimate, is that Saudi Arabia can produce oil at $5 to $6. Yeah. It makes no sense for the low-cost producer to shut in while the high-cost producer, i.e. the tar sands, oil sands, whatever you want to call them, in American shale produces at break-even costs in the $60, $65, $70 range.
All right, well, interesting times, no doubt. What goes down, though, I always say will come up. So we'll enjoy it while we can. Thanks a lot.
Enjoy it.
Good to see
Thank
you again, Don.
Bye-bye.